So why has the stock fallen so much? Has there been news from the company that the growth rates are going to slow? Hey everyone, so it's been a wild last 4 months or so for a handful of stocks that I'm watching. Etsy is probably the one I've been following closely because I think it is a great business. Now, when a stock price falls dramatically like this, we have to try and work out why, because it could either be an interesting opportunity or there could be a really fair reason for it. This is a pretty dramatic fall, but I know a handful of companies that this has happened to over the past few months. C Limited is a company that's down from $360 in November to about $170 in late January. That's way more than a 50% fall in a very short period of time. And Redbubble, well, it's down from $470 to about $2. That's about a 70% pullback. And ASOS is down over 50% as well in the past 6 months, from a high of £59 to now around that £23 a share. So let's see if Etsy deserves to have fallen this much and also do an updated valuation. All right, pay Hadley. Actually, I've changed my mind. I'm going to start with a fair valuation and then dig in to see if something weird has happened to the business. Now, I'm not going to go through a deep dive into the company. I have done this before here on the channel, so I don't want to repeat myself. So just check out that video if you're interested.
Hey, so I'm in my intrinsic value calculator, and if you want a copy of this, it's free, it's in the description, and you can play around with this yourself. So I've got all the numbers here that I've pulled from Etsy. Now, I've pulled that from TIKR terminal. Again, there's a link in the description for TIKR if you want to find if you want to see how I get all this information. I'll do a demo at some point on TIKR, but essentially I've pulled the information from there. And look, this calculator has to assume like projected growth rates out for the next 10 years. And that's the hard part of this in this investing game. I've put in 20% for the next 10 years because, well, look, I'll show you in a moment, but analysts think that the analysts think that 40% for the next 5 years. And I just think that's pretty aggressive. I think they've already grown substantially a lot in the pandemic period. The CEO even come out and said it's like it's 2023 at Etsy at the moment. They're years in front of where they thought they would be. So I can't imagine that growth to be 40%. But look, I guess it's possible because it is a network effect business. So I'll show you what it looks like when I change this to 40% a little later. Now, my return on investment goal, this is how I'm finding fair value at the moment. So this is not for me personally. This is what I think, 10%. That's effectively how we work out fair value. And the multiple I could sell it for after 10 years, let's just put it at 20. It'll be a mature company in 10 years time. So the PE of a price to free cash flow of 20 is about right. And I've got all these other numbers here from TIKR. So it tells me I want to buy it at. This is not what I want to buy it at. This is fair value. So I think fair value at the moment is around about $200. I've had a little bit of a look around other people's opinions on Etsy as well, and it actually is pretty close to what they think too. So Sabre Capital Management wanted to be buying, they were trying to be buying at 200 because that's where they think its fair value is. But for me, I need more of a discount. So I don't want to get 10% because I could put that money in the S&P 500 and still get 10%. So what I'm going to do is I'm going to change this a little bit higher. I'm going to call it, look, normally I gun for 30%. Now, that means I'm going to want to buy this thing at about $40. And it's a far better company than that. And I don't think I would pay higher than that price because it's a really great company, and I really love the business model, and I would want to buy this probably earlier than $40. So look, what I'm going to do is I'm going to actually increase the multiple because I'm also going to increase the growth rate. So like I said, the analysts think 40%. Let's just see what it looks like at 40% for the next 5 years. We'll slow it down after that. And then let me just quickly put that back to fair value. And with those higher growth rates, we'd expect a better multiple. So look, it's potentially worth $500, and the share price is like 160 or something at the moment. So if you were hyper aggressive on Etsy, I can see how this is really good buying right now. And this is probably what some people should be looking at. But I'm not confident on that 40%. I want to be a little bit more conservative. But maybe 20% was not good enough. This is the hard part. This is where it sort of, like, maybe I was really negative on the company. I think it's actually going to be like slow growth for the next few years while the business catches up, and then it starts to accelerate after that again. Catch up from the pandemic years. I mean, like they've already grown 3 years worth of growth in 1 year, essentially. So maybe it looks something more like that. Again, I'd only be getting my 10% rate. So look, 30% was a bit aggressive. Maybe I want 26% maybe. And let's put that growth rate back up to 20%. See how I'm just playing around here with the numbers. So now I'm talking about $80. So where I actually personally think I would be buying this at is maybe something like, I'm happy with that number. I could probably push that to 25. Okay, now we're talking about $100. I think around that $100 mark would be suitable for me. I guess I could be tempted under 130. Maybe I'd buy like a little stake at 130. That would give me a discount rate of 22%. I'm hoping for 15% there, and then with a bit of a margin of safety. So look, play around with this, do your own research in the growth rates, but I think we've got a bit of a ballpark now where I would want to buy it and what I also think fair value is.
So I had fair value at possibly $525 with 40% growth rates like the analysts think for the next 5 years. My fair value was more like $200 and a buy price starting potentially at $130, but would be preferring to look at it at $90. That's when it would be really interesting. So why has the stock fallen so much? Has there been news from the company that the growth rates are going to slow, or that website traffic is not growing as fast as they thought? Now, I think it might be because of the 15 to 20% growth year on year for Q3. Now, remember, since analysts were expecting 40% for the next 5 years, I guess this is just not as good. But when we look at the 9 months into September 2021, they have great results, all in that 30-50% growth range. So maybe that's what has happened and has affected the share price so dramatically that the most recent quarter is just slower than the rest of the year. I was looking, and this is all that I could find as a potential reason. So what I actually think has happened is that a big push towards investing in e-commerce companies from the pandemic has lost its steam and the hype is fading. So I think I'm going to put most of this down to just sentiment in the market. And this is the beauty of investing in public markets. Just as Benjamin Graham would explain, the market is a voting machine in the short term, but a weighing machine in the long term. The people are voting that e-commerce hype was a bit overdone, and now people are just heading for the doors. C Limited in particular is suffering this fate, Redbubble as well, but Redbubble didn't have great results, so that was maybe a bit more justified. And I also think ASOS was having some issues with their supply chain, but I guess the sentiment has swung against them all. And this is why it is so important to do your own calculations and make your own growth assumptions. I like this big margin of safety because it stops me buying anything that has a lot of hype or positive sentiment around it. These things are just short term, and I want to invest for the long term to make a lot more money, and hopefully it's going to be a lot safer. So for Etsy, I kind of hope the stock keeps falling. Everyone loses interest in Etsy at some point, and all the weak hands just turn over their shares to the true long-term owners of the stock. And I think I would be trying to pick up shares around $90, which I know seems like a long way away, but when ASOS was £60 a share, well, £20 felt like a long way away as well, and it's taken less than 6 months to fall to those levels. And by the way, companies like ASOS and Redbubble are international stocks, so you would need a broker that will allow you to invest in these. Interactive Brokers is the best for this, and I think it is the safest broker in the world. Take a look for yourself in a demo account, see if you like it. There's a link below in the description. The stock market is a fascinating place and full of lessons to be learned. And essentially it all boils down to trying to buy great companies just well below their fair value. That's it. I don't have to do anything more than that. Now I want to say a quick thank you to Yusuf Shawani. I'm glad you like my portfolio videos the most. Thanks for your comments and support. I appreciate it a lot. You are a legend. Thanks for staying to the end, and I'll see you next time.